For more on this, I'm joined by Mark Smith. He's vice president of the Connor Smith Wealth Management Group at UBS. And Sandy Villery is partner and portfolio manager of Villery and Company. Mark, let me just start with you. Again, people like to beat up on the big banks, but in terms of what that's telling us about the economy, are you encouraged by what you're hearing this morning?
I think we should all be encouraged by what we're hearing from the big banks, because you're seeing that folks are paying their bills for the most part. Credit cards are getting paid. Businesses that are making money are paying back their loans. And so that's good for the overall economy, that people aren't going bankrupt as much as we thought they were. But we're seeing, and I'm telling my clients, they're asking me, where's the opportunity if I've been sitting on the sidelines like you just alluded to? And we really think that's in the industrials and the materials. They've lagged the market, and we're seeing that there's a big pickup in spending from China. We're seeing that there are not a lot of existing homes, not a lot of new homes out there. So industrials and materials historically have done very well coming out of a recession. But I think with all this pent-up demand and folks buying and not having any inventory, I think those two sectors are going to be great plays outside of tech, which has kind of ruled the day since April. Yeah.
Sandy, tech has ruled the day. Apple in particular is like 14% of the NASDAQ 100 right now. But it looks like we're off to fourth quarter with it continuing to perform like it has all year. What stops that at this point? Is anything?
Yeah, I mean, we're trying to avoid some of those larger cap tech bellwethers, sort of the FANG stocks in general. They've had quite a run, and we're trying to find pockets of value and more smaller cap. If you look at the Vanguard growth versus value, it's almost a 40% disparity. There's a lot of, I think there's a lot of pockets of value, and typically small caps outperform coming out of a recession, and that's where we want to be. I think there's just, you look year to date, S&P's up 9%, Russell 2000 still down 2%. I think there's plenty of opportunity in smaller cap and value names.
Give me a couple of them real quickly, Sandy.
Sure. I like Ligand Pharmaceuticals. It's one of these. They sell a drug delivery technology called Captisol, which they're currently selling to Gilead for their remdesivir COVID treatment. Really like that one. I think it's going to work out well. The Captisol itself is going to add $3 to earnings. Stock trades at 12 times earnings. Very cheap. I like Caesars. This is a play on the economy not only reopening, but also online gambling happening, and they're going to absolutely dominate that particular industry with their William Hill acquisition. And I like eHealth. They're going to help seniors get Medicare insurance online as easy as you can buy a plane ticket on Travelocity. So I like those names a lot, and I think they've been beaten up a little bit too unfairly, and that's where I would be.
Shepard Smith here. Thanks for watching CNBC on YouTube.